Yes, we're getting rejected one more time at the 111, 112k mark in Bitcoin for good reason, because this is a historical resistance. We're going to look at this in a second, but there's an even better reason that we will get above that resistance. And I believe, according to the analysis in this video, that point in time when we go above will be latest by end of January next year. But first of all, why is this resistance so tough to overcome? The reason is this chart. This is Bitcoin on a very long-term time scale when it was just a few cents all the way to today. And we've got a curved line over here that I've shown several times on this channel. Coincidentally, all of the cycle peaks align with this curved line. And we are again very close to the resistance. It's at 111, 112k. And so that's why we've got a hard time getting above. However, there are good reasons to believe that we will cross that resistance at some point, because there's still money flowing into the system. What we're seeing over here is the stablecoin market cap. So since October of 2023, money is flowing from the fiat world into the crypto world. So you're sending your hard-earned fiat to a centralized exchange like Binance. Binance then sends this over to a stablecoin custodian like Tether or USDC. They hold then your fiat and they issue tokens on the chain. And we can see that token issuance over here. So when this is going up, fiat is flowing into crypto, and this continues to grow very quickly. In the last year, the stablecoin market cap grew by 47%. Yet we still see all of that volatility in crypto. We still see how the resistance at 111, 112k in Bitcoin does get respected. But it won't get respected forever. And here's why. This is a bit more of a complex chart, but we're going to break it down. It has a lot of value. What we're seeing here is the stablecoin dominance at the top. So how much of the entire cryptocurrency market cap is currently in stablecoin? So that's a chart at the top. What we see at the bottom is again Bitcoin's price. So when the stablecoin dominance is very low, it means a lot of people have swapped their stablecoins into risk-on assets, so Bitcoin is very high. When then the stablecoin dominance is rising, people rather swap to stables, right? This is then when the crypto prices tend to go down. We see local bottoms in Bitcoin when the dominance is very high. When then the dominance goes down again, we see a local top in Bitcoin. Then again, there is this inverse correlation. The dominance in stablecoins is going up, and crypto and Bitcoin tends to go down. So that's what those vertical lines are for. They simply signify when there's a top in stablecoin dominance or a bottom in the Bitcoin price, or when there's a bottom in stablecoin dominance or a top in the Bitcoin price. Now let's simplify this chart a bit. Let's take away those vertical lines and see where Bitcoin recently topped out. So in the middle of December of 2024, in the middle of January 2025, in the middle of May, and now just recently. Those tops align relatively well. They are slightly higher each time, but we are at very similar price levels. Now at the same time, the stablecoin dominance tended to go up. And that's because money continued to flow into crypto. In other words, each time we hit a high in the Bitcoin price, the market was actually less and less heated. There was more and more money on the sidelines ready to get deployed. This trading range in the stablecoin dominance that we have seen in the last 1.5 years, it shows us at what point we have to be very cautious deploying into risk-on assets, and it shows us when we can be more risk-on. And even though the Bitcoin price had been at very similar levels, since the Bitcoin dominance rose during the time, currently the market is not as heated as it used to be. There is more money on the sidelines. And now because of that, if we just continue on this merry path of more and more money flowing into crypto, since this is a very constant trend, we will have again a lot of money on the sidelines in January next year. So latest by that point, the market will be so much risk off that we will see again a deployment of those stablecoins. At least it's very likely. And again, when the stablecoin dominance is going down, the crypto prices are going up. So yes, this historical resistance is relevant, and we might fail yet one more time at that 111, 112k mark. Who knows? But time is on our side because more and more money is getting into the market. And if there's so much money on the sidelines ready to get deployed, when we are at 111, 112K, then we might see that deployment finally, and then we see the breakout. Then we go to 130, 140K potentially. Now we are going to see those all-time highs in Bitcoin, not because all the retail investors are suddenly getting in. Actually, the interest by the average retail investor is still very low. What's happening instead is accumulation by Wall Street. Because have a look at the number of active addresses on the Bitcoin network. This is not growing for the last 7 years. We had a nice peak in 2017 when Bitcoin was at 20K. Since then, we are hovering in a range. Yet the Bitcoin price did another 5x. Of course, the Bitcoin price tends to be elevated when there's more active addresses. Currently, the number of active addresses tends to be rather low. Again, another sign that there is potential more upside long term. Accumulation by small retail tends to happen when the market goes down. So people that don't have millions to deploy, they tend to buy when the price of Bitcoin gets depressed. So have a look at the number of addresses with a balance of more than 1 BTC. So that's at least 100K Bitcoin. It grows as the price of Bitcoin is going down. It tends to go sideways as the price of Bitcoin is going up. Now, if you're saying, okay, 100K is maybe not small retail, we can see the exact same thing for the number of Bitcoin addresses with 0.1 BTC. So that's now 10K. Again, the accumulation happens when the Bitcoin price is going down. It does not necessarily happen right now. The Bitcoin price in the last few months did not go up because the number of retail investors went up. Instead, it is going up because of Bitcoin treasury companies, which is, by the way, now mainly still MicroStrategy. So here's the accumulation of MicroStrategy over time. They have increased their exposure massively in the last 6 months. And yes, there are other companies that start to buy Bitcoin as well, but it's just a small fraction compared to what MicroStrategy is doing. MicroStrategy is obviously betting on other companies following suit. We've also got accumulation by the ETFs. And so when we look at both combined, this is the result. In the last 1.5 years, roughly 1 million Bitcoin, or 5% of the supply, got scooped up by the ETFs and by MicroStrategy. And this is very constant growth. There's very little selling happening. Most of the time, the ETFs and the Bitcoin treasury companies are accumulating in the same way how there's money flowing into the market via the stable coins. Now, there used to be a time when this was not true. This was the Terra Luna UST collapse, and then subsequently also FTX went belly up. But if there's no similar massive black swan event happening, and the market will continue to expand, and then we will see a new all-time high in Bitcoin latest by January of 2026. Again, because at that point, the stablecoin dominance is extremely high. A lot of money is on the sidelines again. And in the last 1.5 years, we always saw the stablecoins getting deployed at those levels, which leads to rallies in crypto prices. Now, fundamentally, the problem is that returns are very much concentrated in a few assets. Most assets tend to go down, and there are a few altcoins that make the multiple X return. And the problem is those assets change over time. What worked well yesterday might not work tomorrow. And so it's always a game against the odds. And so we can't really deploy a lot of capital in those trades. If the likelihood of losing is very high, it means we can't deploy too much in the position. It also means we can't necessarily diversify, because if we now own 10 or 20 tokens, most of those tokens are losing. And if then the few outliers make up for all the losses is a completely different question. It's very unclear. Now, there is a way to make money a bit more consistently, and that's actually trading the larger tokens. The issue with the larger tokens, though, is that they move very much in tandem with the overall market. As in, when Bitcoin goes up, then Solana tends to go up as well, Ethereum tends to go up as well. But there are movements within crypto where sometimes a particular asset class is more preferred than another one. And we can play on that relative valuation. We can play on attention moving from A to B within crypto without having to try to find the few winners. For example, have a look at this. This is the Solana dominance. So how much of all of crypto is currently in SOL? And there seems to be somewhat of an invisible ceiling between 3 to 4% 4%. This is where Solana historically had been very expensive. Or have a look at this. This is the Ethereum dominance. It tends to be very cheap when only 7% of all of cryptocurrencies market cap is in ETH. It tends to be expensive when it's around 20 or 21%. And so we can benefit from this independent of where the US dollar valuations go. So if Bitcoin is going up or down does not interest us. The only thing that interests us is whether or not Ethereum will perform better than Solana or Solana will perform better than Ethereum, just relatively speaking. So I saw that set up when Ethereum was extremely cheap in the middle of April. We got very close to the historical low that was formed in September of 2019. And so have a look at this. This is Solana relative to Ethereum. And when ETH hit that low point, I shorted Solana relative to ETH. So I was not interested at all in the Solana US dollar price or in the Ethereum US dollar price. I was only interested in the relative valuation. I saw we are high on the trading range and I bet on that range coming down. So here's that post. It's from April 13th. I'm opening a relative valuation short of SOL to Ethereum using Venus Finance. More information will be provided in a few hours in today's premium update video. So I publish premium updates every 3 to 4 days. And then on May 20th, I closed the position. And of course, other members made money with this as well. But I want to share something here. This is when the position was opened. Here is when the position was closed. And I want you to look at the Solana value. Again, we bet on Solana doing worse than Ethereum. Solana itself actually went up during the time. It appreciated by 25%, but Ethereum appreciated more than that. It went up by more than 50%. And so we completely canceled out the macro. We are not interested at all whether or not everything is going up or down on a given day. We made money just on the relative valuation. So within those few weeks, we went from 43K to almost 60K. Yes, I know these kind of strategies might seem a bit complex, and why don't we just buy an altcoin and make it 10x? But again, it's all about risk-adjusted returns. If we want to bet significant capital, tens of thousands of dollars, or let's say relative to your net worth, high percentages. If we don't just want to play with play money, but we actually want to make real gains, we need to use strategies that don't have an 80 or 90% chance of failure. I see people making these mistakes all the time. I even see people making mistakes with their risk off position. So let's say they don't want to be exposed to crypto, they just want to be in stable coins. Let those stable coins just stay laying in the wallet. But there are opportunities to make very nice constant returns even with stable coins. So this is 16% APR. This can be achieved on Hyperliquid without a single trade. This is all just automated arbitrage by the market maker. But of course, I've also got my risk on part of the portfolio. And here's something other people don't show. Most people just show individual trades and say, hey, this is how we always make money. Very few people are actually willing to share their overall portfolio performance. Now, I started trading on Hyperliquid on April 22nd, and here is my P&L over time. And since I'm sharing all of my trades, the members can just copy me. And this is actually very nice feedback. The same kind of portfolio development chart. This chart tells a story, first trying it without any support, and then afterwards, where this green arrow is shown, exclusively following Gerhard's trade and slowly digging out of the hole. If you've got the right risk management in place, there's actually a lot of money to be made in this market still. But actually, I don't want that everybody is just copy trading me. The community is about elevating our skills. It's about learning as much as possible, helping each other, finding market opportunities, and then of course capitalizing on those opportunities. So I've actually made more than 100 tutorial videos just on various topics within crypto, risk management, portfolio valuation, blockchain analysis. Feel free to binge watch this. It's actually nice to get those DMs. Hey Gerhard, I just wanted to thanks a lot for everything you've done. Since I've only been listening to you, I've been consistently profitable now. I just entered your, I've blacked this out, XYZ position as well. Or here, this is also another nice message. I'm not going to read through all of this. Feel free to stop the video. But yeah, if you want to join us, if you want to copy trade me, if you want to learn more about crypto, feel free to check it out. It's currently $125 per month. The price has actually been lowered because now the attention on crypto is much lower than it used to be a few months back. Once the masses come back in again, then the price will be back to $165. So if you're signing up today, you will never pay a higher price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.